Major U.S. averages rallied Friday on the back of strong gains in January. Now, Kenny, stock mutual funds garnered record funds in January. Do you see the bullish bets continuing?
I think what you've seen now is you start to see people getting much more comfortable with dipping their toes back into the equity space, right? We went through this very difficult time, 4 or 5 years. They waited, they were patient, they watched, they want to feel more comfortable, they want to understand. And I think what you're starting to see now is people exactly doing that. They're not coming in all in, but they're starting to dip their toe in. So for the equity market and for equity investors, I think that's very good because it's a restoration of getting real investors into the market, right? Because the last thing you want to do in a marketplace is lose the participants and lose the investors. And I think there was a time there where we were on the verge of doing that. But I actually think this is all bullish.
Yeah, and interestingly, today the markets rallied, even with a lukewarm to tepid jobs report.
Right, and so listen, I have a theory, right? Because the report was positive enough that we saw some creation of jobs, right? So not nearly enough. We need to do 300,000 jobs a month to really get us out of this mess. So today we did less than that, right? 154, 100, whatever it was, right? So we're moving in the right direction. That's good. But we're clearly not moving fast enough to get Uncle Benny and the Fed to pull back on any stimulus. So therefore, investors are looking at this saying, listen, we got the best of both worlds because the Fed is going to continue to stimulate, so that's good. And we're starting to make some headway in terms of job creation, so that's good. Maybe not as fast as we want, but all that means is the Fed's going to stick around longer, and so the market loves that.
And so now we've got the big GDP and jobs numbers out of the way. Next week, the calendar's going to be a little more quiet. Are you expecting conversations about China, Europe, fiscal issues coming back into the forefront?
Sure. I think that, next week there is some macro reports out, not nearly the calendar we had this week. Earnings are going to be less and less next week because we're getting really to the tail end. There'll be some key earnings out. Kellogg's out next week, and Merck, and Anadarko. So there are still some big ones to report, but not nearly at the rate we've had, right? So the focus will once again start to shift to the broader discussion, whether that's a broader global discussion about Europe, whether it's a broader discussion about what's going on here now in Washington. We're now in February. We're 4 weeks away from March 1st, which is the deadline for sequestration. That conversation is going to start to take place. It may not be next week, but you're going to see it now as we move closer. So the market will have a chance to digest this move. Today we decisively broke through 14,000, traded up to 1410. We'll see where it closes today. The S&P is now broken through its intraday high of last week at 1505, is up here now at 1512. We're within striking distance of 1525, which is not the all-time high, but it is a resistance level that a lot of technicians are looking at. I think that we probably challenge that first before we then move back.
And also looking back at the January data, the NASDAQ 100 lagged behind the broader markets. Do you see it playing catch-up, or do you see it dragging down the broader markets?
No, I think, and I think it's well known that Apple clearly probably was responsible for a lot of what happened in the NASDAQ space, right? And I think Apple's getting to a level now where people are starting to dip their toes back in with that, right? And it'll feel better. I think tech will certainly start to rally back because I think, like everything, the pendulum swings both ways, right? And so maybe it's a little bit overdone. It's got to come back to equilibrium. So tech may suffer for a little bit longer and it may lag a little bit, but I don't think it's going to drag it down. I think it'll start to come back just at a slower pace.
Thanks, Kenny. This is Andrea Say reporting for The Street.